Welcome to today's webinar. We are doing the first webinar in our series today. So today we'll be running through life after incorporation. So what's going to happen after your company is incorporated. So we'll look at things like corporate governance, we'll be looking at filing requirements, any important dates you might need to know or at least consider, and some registrations. So we'll go through introductions. So my name is Liam. I'm Service Improvement Manager here with First Formations, so I work with our sales and support team. With me I have Nicholas Campion, who's our Chartered Secretary and Associate Director of Company Secretarial. And who is First Formations? Well, we're the UK's leading company formations agent. We've incorporated over 1 million companies. We've helped many thousands of customers benefit from boosting their professional profile, as well as benefiting from concepts such as limited liability, which is going to protect your assets, your personal assets and your funds while working with your company. Now, a little bit of housekeeping. So we are on a Zoom call, so everyone will be muted so you can hear us. And we'll try and get through all questions towards the Q&A. We'll get through as many as possible towards the end of the call. So to start us off, let's start at the beginning. So if you've just incorporated your company, you're going to receive some information and documents from Companies House. So Nick, what are we going to receive?
You, Liam, are not going to receive a lot of information from Companies House. There's actually probably about 4 things. 1 document and 3 pieces of information that I think you need to be aware of when you incorporate. The first of which, that first document, that only document, is probably going to be the most exciting one that you receive. That's your incorporation certificate. The incorporation certificate will probably be in electronic form. The only reason you might have a paper copy is if you formed your company directly through Companies House via post, or if your formation agent happens to provide you with a printed copy once the company has been formed. It's a very exciting document, as I say, and what it's going to essentially state or summarize is that you've created a new company. You've created a new entity under the eyes of the law, that separate legal entity, and all of the benefits that you would expect to receive from it, namely limited liability. You'll get some other information on the incorporation certificate as well. You'll see your first name, your registration number, what act or legislation, I should say, that the company has been formed under. That will all be detailed on that certificate of incorporation. You're going to need that certificate a lot during the life of the company, so make sure you keep it safe. You might need it if you're opening a bank account, through due diligence purposes, with any third parties that you're dealing with. Keep it safe, ready to hand. The second item, it's not really a document, it's more of a piece of data actually that you receive from Companies House, is the company registration number. This goes through a lot of different names, Liam. Company number, registration number, doesn't really matter. It all refers to the same thing. It's an 8-digit code or number that has been issued to you by Companies House. Every company that gets formed gets a unique number. At the minute, I think we're in the 14 millions at the minute, hopefully with the 15 millions soon enough. The only reason that you might not have that 8-digit code is if you happen to form your company in either Scotland, or if you form it in Northern Ireland, or indeed if you happen to form a company that isn't a private or a limited company, I should say. In those cases, you might have two letters at the beginning, followed by 6 digits. So if you're formed in Scotland, you would expect your company registration number, your company number to start with SC, that's Sierra Charlie, followed by 6 digits. Again, really important piece of information, will have been detailed on your incorporation certificate. You are going to need it many times throughout the life of your company, particularly again through when you're going through due diligence, when signing up to third parties, banks, lenders, they all want to know. Once you engage with them, they're going to say, okay, happy to help. Can you give me your company name and your registration number? The third item on our list that you're going to receive, it's another code. You're going to get a lot of codes when you form a company. The third item, the second code, is what's called the authentication code, or auth code, as it's sometimes referred to. This is a 6 alphanumeric character code, which, best way I can describe it, is going to be your online filing password. This is, Liam, your gateway to submitting your statutory filings to Companies House online. In years gone by, I'm talking quite a few decades ago now, you would have had to have submitted everything, your annual accounts, information about directors and so forth, any changes that you make, you'd have had to have submitted them via paper. That's thankfully not the case anymore. You can submit these electronically. And your authentication code, by whatever name you choose to refer to it as, will be your gateway into allowing you to do that directly with Companies House. Why would you do that? There's all sorts of reasons. Probably the principal ones are that it's quicker. You don't have to get your paper documents together. You don't have to submit them, post them to Companies House, wait for them to process it. It can take 2-3 weeks, depending on exactly what the form is. You don't really get that with the authentication code. It's almost instantaneous in terms of being received at Companies House. It's easier, and sometimes it's cheaper. Some forms, as you can imagine, there's a general push towards forms being submitted electronically rather than via paper, and not least for the environmental benefits for it. And what we find is that because you're a little bit more constrained in the data that you can input when you're filing at Companies House electronically, what we find is that mistakes, rejections of forms that are submitted to Companies House are much lower when you're submitting online. So it's a really important piece of information. You're going to need that, and you're going to want to keep that safe. Don't hand that out to just anybody. The fourth and final piece that you're going to receive, it's actually 2 pieces. No, it's 2 categories, each with 2 pieces, because we're going to deal with 2 annual filings. I know you really want to discuss that in a little while, but it concerns the annual return, or the confirmation statement, I should say, and the annual accounts. And those 2 dates, for one set for the confirmation statement and one set for the annual accounts, will be the made-up 2 date and the filing date. Straight into the diary. Don't forget them.
Absolutely. And so just to let's see what happens next. So you've got all this information, you've incorporated your company. The big question then is, what next? It's
a very broad question. One of the things I like about registering companies is that it's a great leveler, because it doesn't matter how big your company is or going to be. It doesn't matter what it's going to get involved with. It doesn't matter the people that are involved. When you're registering a company, frankly, pretty much everyone is going through the same process. You're putting that application together. You're putting some additional documents together, although if you've got a good formation agent, they're going to help you make sure you have all those documents. And you're essentially just sending them off to Companies House, the registrar of companies here in the UK. The problem is, once you get that, that fabled certificate of incorporation, and you get all of those benefits that derive from having a limited company, that's where the journey for every company sort of turns from a straight and narrow to, well, exceptionally wide, or infinitely wide. It entirely depends. What your next steps entirely depend on the context of the company, the specific circumstances of what you're going to do, when you're going to do it, and so forth. If I can give you just some general rules of the sorts of considerations that you're going to be looking at, well, probably the first thing I'd think about, everyone's favorite topic, which is tax. And in this particular case, I'm thinking of corporation tax. The rule is that you need to be registered within about 3 months from kicking off trading. You also have matters of value-added tax, VAT, to be concerned about. But we aren't just talking about tax here. We're not just talking about legal considerations. You've also got practical considerations to make as well. So right off the bat, maybe I'm thinking, in addition to tax, maybe I'm thinking I'm going to go get myself a bank account. Common misconception, you don't actually need a bank account if you're forming a company in the UK. That's absolutely not a requirement, certainly not compulsory, but it's certainly, in almost every circumstance, much easier for you. For, amongst other reasons, allowing you to ensure that you can separate your personal income with the business's income. It's a very important thing, which does burn a lot of people. That's another consideration straight off the bat. Do I need an account? Should I go out and get it? Then you're going to want to start thinking about, should I engage the services of an accountant? That's a very common thing as well. It's a big area. And sort of leading on from that, maybe I need to be thinking about software, accounting software that's going to be dealing with my finances, money coming in, money coming out, generation of invoices, so on and so forth. Straight off the bat, for a lot of people, that's going to be a consideration. And just one final example, maybe I need to think about insurance straight off the bat. Professional indemnity is a common one. Am I going to need to be covered? Sometimes I have to be covered for certain things. Or employer's liability insurance. If I'm employing people and I'm going to be paying them, then I need to get employer's liability insurance. That's compulsory here in the UK. And that actually leads me to another point, another tax item, PAYE. If I'm going to be employing people, which again won't impact everybody, but in almost all circumstances, if you are employing people, then you need to be thinking about applying for PAYE before that happens.
Absolutely. And so you mentioned some important dates earlier. So what dates do we need to make sure are penciled into the diary?
There's a lot of dates to consider. Thinking about Companies House specifically, I've already sort of alluded to it because we have those 2 annual filings that happen every single year, regardless for every single company. And there's 2 dates that you're going to get. With respect to the confirmation statement, that is the made-up to date and the filing deadline date. So what's the made-up to date? Well, the made-up to date is the date on which that filing for the confirmation statement, and I know you want to talk about it, and we'll come on to that in a little while, exactly what this entails, but the made-up to date is the date upon which the entire filing of your confirmation statement has to be accurate as of up to. So it has to encapsulate everything up until that date. Generally speaking, when you formed a company, as I said, it's an annual filing, so you should expect the first made-up to date of your first confirmation statement to be the day before the anniversary of your company's incorporation. So say, for example, I formed my company on the 2nd of January 2023. That means I would expect my made-up to date, that date which, when I come to submit my confirmation statement, it's going to have to encapsulate everything up to, my first confirmation statement will be made up to the 1st of January 2024. The filing date, so the deadline for submitting that confirmation statement that's going to be correct up to the 1st of January 2024 will be 14 days ahead. So in that particular example, you're looking at the 15th of January 2024 as that deadline. These dates always follow the same rules, although if for whatever reason you are confused, you can always log on to Companies House's service, which will detail on the company overview. When you find your company, you can search your company, you can open it up and you'll get an overview. It'll actually give you a splash of the dates at the bottom. Just moving to the annual accounts, they have a similar sort of thing to the made-up to date. It goes by various names. And again, that is the date that everything is going to be correct as of up to when you submit your accounts. So your accounts are going to include everything up to that point. That first date that you're going to get, and that first date that's got to go into the diary, is the last day of the month that's your anniversary of incorporation. So basically it's 1 year and then the end of that month. So that's a bit of a mouthful, I get it. To take our example earlier, you formed a company on the 2nd of January 2023, then I would expect your first set of accounts to be made up to the 31st of January 2024. So we've just gone the anniversary and then right to the end of the month in question. We then have a filing deadline. It's a little bit funny. This is probably not a great example to start on incorporation, but the general rule is that 9 months after your made up to date for the annual accounts, you will have had to have submitted those accounts to Companies House. It's actually slightly different, give or take, for your first set of accounts, given that they are required within 21 months of the date of incorporation. The effect, Liam, is they're pretty similar to each other.
Lovely. And so we'll go on to exactly what the confirmation statement and the accounts are and what they actually mean in a little bit. So that covers the dates with Companies House. What do we have with HMRC?
I mean, we touched on it ever so slightly earlier with corporation tax. That's the big one, which impacts a lot of people. Corporation tax, the rule is that you have to have registered for corporation tax if you have started trading within 3 months. So that means if you have incorporated and begun trading in whatever form it is that day, then you will have needed to register with HMRC for the purposes of corporation tax within 3 months from that point. Value-added tax doesn't have this sort of hard deadline date, VAT that is, sorry. VAT is voluntary in terms of registration for the first £85,000 revenue. Of course, you can register beforehand if you want. But the rule is that if you expect to hit that £85,000 threshold within the next 30 days, then that too would need to be, you would have to register in that time frame. The actual payment for VAT, that would normally depend on the payment periods or the VAT periods, I should say, that you have set up with HMRC. They can be monthly, quarterly, I think is the most common one. In terms of actually filing the returns and making the payments for VAT, then you're looking at, I believe it's 1 month and 7 days. So it's the 7th day of the second month. That's when you're going to be wanting to submit them to HMRC.
Lovely. And just while we are on the topic of HMRC, so when you incorporate your company, we've already discussed the things you'll receive from Companies House, but HMRC are also going to send us a UTR, aren't they?
They are going to send us a UTR. Another really important code, so you're going to get a lot of very important codes in the life of a company. So UTR stands for Unique Taxpayer Reference. As you can imagine, it goes through a lot of different names as well. UT number, taxpayer reference number, that's what it stands for, as I say. Doesn't really matter how you want to refer to it, but the UTR will get sent to you. It's created by HMRC, it's not a Companies House matter, and it'll be created and sent to you. The purpose of the UTR number is, again, for identification purposes, but specifically with respect to your company and its taxation, right? So we're not don't get it confused with the registration number. You're going to be asked for the registration number, the UTRs at different points. They are very easily confused with one another. But your UTR number will be very helpful for you, again, through a lot of due diligence processes that you might go through. Setting up your government gateway account, that's something that you're going to need your UTR number for. And in terms of actually getting it, you don't actually have to do anything. Companies House and HMRC will talk to each other. So when you form a company, Companies House will go up to HMRC, let them know, hey, this company's been formed. And that will start an automatic process, whereupon HMRC will create your UTR number and they'll send it to you within usually about 2 to 3 weeks of your company being formed. If for whatever reason you lose that number, then any other correspondence that you have with HMRC will include that UTR number on there. Or if you just never received it, let's say it got lost in the post or something, you can request the UTR number again online from HMRC. And again, it will be sent to you within about 2 to 3 working days at your company's registered office address. They won't tell you it over the phone, they won't send it to you via email, they won't do anything. It's going to go to your registered office address.
Mm-hmm. And if you're using our registered office address, so if you're using the 71 to 75 Shelton Street address, we will scan the mail and make it available through your online portal. So from the dashboard, just click My Mail and you'll see it consolidated there in PDF form. So you can refer back to that one at any time. It will, at most, will take about 24 hours to get uploaded, but usually it is uploaded the same day it is received. So just heading back to those important filing requirements that we were discussing before. So the first one with Companies House was the confirmation statement. So run us through exactly what that is.
It's such a simple, in some respects, simple, regular filing. Sometimes gets overlooked, but it is crucial. It serves multiple purposes. And as I said, it's an annual filing on the dates that we discussed. So usually the made-up to date will start by being the day before the anniversary of your incorporation, and it'll be every 12 months from then, with the deadline being 14 days thereafter. But essentially there are 3 key functions that the confirmation statement fulfills. The first of which is that it confirms certain information, certain changes to a company that may have taken place or that you are seeking to report to Companies House. There's not a lot, there's not much that you actually change via the confirmation statement, but the ones that are on there are important. So the first thing that you can change on there is your standard industrial classification codes. Now you might remember when you formed your company, you had to select up to 4 different codes which were going to describe the business activities of your company. Well, they aren't actually permanent. You can change them throughout the life of your company. And the way you would do that is by submitting a confirmation statement, so you can change those. There are certain updates to the company's share capital, so information about the makeup of all of the shares together that you can update. Things like paid up status. I won't go into it in too greater detail, but that can be updated via the confirmation statement. And probably the big one in terms of what the confirmation statement will actually report or can report to Companies House is changes in the shareholders. So, for example, if you had allotted shares, created more shares and given them to someone at some point during the year, then at the end of that year, you'll need to tell Companies House who those shares actually went to. Your confirmation statement will do that. They'll say, look, this is the updated shareholder list. Maybe there's been some transfers in that time. Maybe someone sold shares to someone else. They brought in a new person. The confirmation statement shareholder section is what will tell the world, give them an update as to what happened there. There are, just FYI, a few additional changes that can be reported. For 99.9% of companies, they won't be affected by this. But to cut a long story short, if there are changes to the trading status, say for example, if you get listed or something to that extent, if there are changes to those trading statuses there, then that would also be submitted on the confirmation statement. So only a few things, Liam, but all of them very important that would be reported. And that's just the first function of the confirmation statement. The second function is slightly more implicit, and it is commonly forgotten, I have to say. What filing a confirmation statement does is it essentially tells the world that everything else that you have submitted to the public record, so to Companies House, throughout that period, that year leading up to the confirmation statement, it's telling the world that, by the way, everything else I've sent in is correct, and we're all up to date. So I mentioned only a few of those items get updated via the confirmation statement. And of course, there are other matters like changes of directors, like changes of addresses, and small things like this, or changes to the shares in other respects. What the confirmation statement is doing is therefore also drawing a line and saying, right, in addition to all of those other updates I've just shown you, the SIC codes, if there's been any changes there, changes as shareholders, I'm also saying everything else you see on the public record is correct. We draw the line in the sand, we're good to go, we carry on. That's the second item. And the third item, again, commonly missed, although probably will make sense soon, very simply, is that it tells Companies House, hey, this company is still needed.
Mm-hmm. So obviously a very important filing to get in. What happens if, for some reason, the confirmation statement is late or gets missed?
If it is late, Liam, I'm sure no one's filing it late. It's a very important filing. It comes around every year at the same time. Directors are legally responsible for ensuring that their confirmation statement is submitted not just accurately but on time. Make sure it gets submitted. But let's just live in the real world just for a second and understand that mistakes do happen. Sometimes you might forget a date. We might not diarize it properly. I know I'm a very forgetful person. Things happen. So what happens there? Well, firstly, not what happens. What do you have to do? Put everything down, get it submitted ASAP. If you find that you're late for your confirmation statement, that is your prerogative. Get it submitted right away. Now, once you've done that, then we can start thinking about, well, what are the consequences of what's just happened? And there's a few consequences. The good news here is that there are no automatic financial penalties. And what I mean by that, Liam, is you're not going to wake up having submitted your confirmation statement late, and then Companies House to come around and say, thanks for submitting late, here's your fine. That doesn't happen, which is good news. But what I find, and I just want to dispel the myth, just because you don't get fined automatically doesn't mean that submitting a confirmation statement late is consequence-free. There are a lot of consequences. The first of which and this will be is always of concern, is that you open the company and all of the officers, the directors, to prosecution. I said that the filing of the confirmation statement is a duty of the directors, the named directors of the company, to ensure that they submit it not just accurately, but also on time. And if you fail to do that, you are in what's called default. You've defaulted on your obligations, you failed your obligations as a director, then you do open yourself to prosecution, which is a terrifying thought. The second big consequence of failing to file the confirmation statement is that actually you could lose your company. I said earlier, when you asked me what are the functions, I said one of the things is that it tells everyone that, or Companies House, you still need the company. Well, what does that mean? If you don't submit, essentially Companies House have this role. They have this role where they have to incorporate companies, they have to accept certain filings, process it, maintain the company register. They've also got to dissolve companies. And they actually have a statutory right or duty to close companies that are not trading, that are not in business. Now, that is an exceptionally broad term. It's probably quite difficult to quantify. And they certainly don't have the resources to go around checking on everybody. Hey, how's it going? Is your company still needed? So how do they deal with that? What they do is they take cues. And one of the most effective cues that they can take in is the non-submission of your confirmation statement. Hang on, this is a very common filing that everybody has to do at regular intervals. Everyone knows the dates. They haven't got that in. Maybe that's just because they don't need it. They're not thinking about it. They don't want it. They're just hoping it will go away. And if they make that deduction, and it usually happens if it ends up being about a month late, what will end up happen is they'll publish what's called a compulsory dissolution notice or a compulsory strike-off notice. And that kicks off a process which takes about 2 to 3 months, which, if it completes, then the company becomes dissolved. And if your company becomes dissolved, then all of those benefits that you get from from incorporating a company that you discussed earlier, matters like limited liability, creating that separate legal entity away from your own, all of that disappears if the company becomes dissolved. So you don't get any of those protections anymore. If you had a bank account open in your company's name, and your company gets dissolved, indeed compulsorily by Companies House, then that bank account will freeze. You won't be able to take any money out. You can still pay money in, by the way, but even if you did that, you won't be able to get it back out, which can be a huge problem, a very huge problem. And the final point on that particular matter is that if your company dissolves and you still trade under the name, that's a criminal offence. So the consequences of losing the company, which itself is the only actual consequence that we're talking about here, is stark. It's very big. It doesn't happen overnight. It doesn't happen overnight, but you have to be aware of it. If you're not on top of it, that can happen. And I just want to make a final point. We've talked really about the legal side of things. But there's one other point I want to raise about late filings or confirmation statements, which hopefully will shed a bit more light here, is that this can cause reputational damage, not just on the company, but the directors themselves. The submission of a confirmation statement is known, or should be known by every company and every director. The dates are published, everyone knows the rules, it happens every single year. And so if you're late, or you're just not filing it at all, then others, I guess, will, say banks or other third parties, lenders, they might make a deduction because they've got to figure out who they're going into business with. And the first thing they'll check is the public record. And if they see that the confirmation statement is late or routinely late or something, then they may make a deduction on the capabilities of the directors, and that can influence whether they want to go into business or not. It's an often forgotten additional element. Sometimes we focus too much on the legal side of things, but you also have a reputation to protect. And the failure to submit a confirmation statement on time may well harm that. And that could be just as bad.
Definitely. And if you do need, or if you're wanting to have a third party take care of the confirmation statement for you, we can actually file a confirmation statement. Our secretarial team can do this on an annual basis for you. If you do find that you need to get it in quickly as well, we have an express service. We can get that filed within 24 hours, but obviously everyone's going to remember to file that one. So we've then moving on to the other filing requirement that you're going to have with Companies House, which is your annual accounts. So run us through, what are the annual accounts, Nick?
Certainly, annual accounts, often mistaken with the annual confirmation statement, or the annual return as it used to be called. What the annual accounts are really concerned with is providing a regular update, a regular snapshot of the financial position of a company. As I say, it takes place annually. We talked about the dates where the made-up to date will commence on the last date of the month anniversary of incorporation, with your deadline days being 9 months ahead of that. And as I say, it will give a rough breakdown of the finances behind the company. Exactly what you submit, Liam, will depend on the size of the company. So the big, large entities will have to fulfill a lot of obligations, but generally as you go into the smaller companies, you reduce in size, you can get exemptions. For example, the exemption for audits and so forth. And if you're really small or you're just not doing anything else, there's nothing going through your books, you may even be allowed to submit dormant company accounts. That's always an option. Like the confirmation statement, it is a responsibility of the directors, the officers of the company, to ensure it is not just submitted on time, but that it demonstrates a true and fair reflection of the company's finances at that stage.
Mm-hmm. And I guess we've had a quick look at the consequences for a confirmation statement and not filing that one. What about the accounts? Are they the same?
Sort of. Again, as a director, you need to absolutely make certain sure that you are not submitting your accounts late. But again, if we can just, for a brief fleeting moment, move into the real world, sometimes this does happen. I guess in the first instance, like the confirmation statement, what I would say is, number one, if you find you are late, then drop everything, get it in as soon as possible. Do everything you can to make sure it's submitted ASAP. In terms of the consequences, unfortunately, unlike your annual accounts, you will face automatic financial penalties if you file late. So what I mean by that is, upon submission to Companies House, remember we're just talking about the Companies House element here, upon submission late, you will be fined at least £150. So if you're late by even a day, 6 hours, 30 minutes, 2 minutes. If you do that late, past the deadline, you'll be hit with a £150 penalty. And it will increase the longer that you leave it. The later you submit it, the greater the deadline, the fine will be. And it will also double, actually, if this is the second year in a row that you have carried that out. So, those costs can very quickly build up and something you want to avoid at all costs. Again, like the confirmation statement, it is a director duty. You face prosecution, and the company faces prosecution if you fail. You default, remember, you default on those obligations if you do that again for your annual accounts. Just on the annual accounts, I should actually mention there is an appeals process, and I get asked about this all the time, Liam. Mm-hmm. There is an appeals process if you do get fined. But I can tell you now that the appeals process is very, very harsh. Not many companies have their appeal upheld, and likely if you are fined by Companies House for the late filing, you probably will have to pay for it. Even excuses like my accountant was ill, I was ill, don't fly. They generally don't fly. I think probably, if I had to guess, I'd say 95, 96, 97 out of 100 appeals are rejected. Why do Companies House take such a hardline approach? Well, then to answer that question, we just go back to the original agreement, the original contract when we incorporate a company. Because when we create a company, we get all those lovely benefits, that fabled limited liability. We get that. when we submit our incorporation application and it's accepted. And in particular with limited liability, it's a fantastic benefit for people. It gives you protection, which means you can do things you may never have wanted to do before. It also allows you to sleep just that little bit easier at night, knowing that your finances, your personal finances are protected, or as easy as someone who runs their own company can sleep at night. Inherent to that agreement, the government says, and I'm talking about the government in the abstract sense, they say, of course you can have this, of course you can have the limited liability status and everything else that comes with forming a company, of course you can have it, but you're going to have to do something for me. And what is that? Amongst other things like filing the confirmation statement and so forth, I want to see a snapshot. I want regular updates as regards the finances of your company. And that's why, it's probably one of the key reasons why Companies House is so hardline about it. It's sort of fundamental in the agreement between the company and the government when they say, I want to create this entity and all the benefits that it gives me. And again, just like the confirmation statement, the failure to submit your annual accounts on time or at all, in addition to potentially losing the company, again, going through that same process that we talked about with the confirmation statement, not filing it might be a cue to Companies House to say, right, this company is not needed, let's go ahead and close it. In addition to all of that, again, we have the reputational elements coming into play here. We're saying that, all right, that regular filing that everybody knows about with very specific dates, the same rules for everybody. If you haven't got that in, what does that say about the directors? And the conclusion there may not be great.
Mm-hmm. So obviously these are really important, your filing requirements are really important. So customers may want to look at getting someone like an accountant to help with these. Is that something you would suggest? Is it necessary?
I think as a general rule, that would absolutely be something I would advise. It is a common myth that you have to be an accountant in order to complete your own accounts, and that's just not true. If you feel that you can do it, you are absolutely within your rights to do that yourself. But what I would say, because that's a very simplistic answer, but what I would say to that is that you should only do so, if you are absolutely certain that you are able to, that you can fulfill those rights. Because remember I said, it's not just a case of submitting them on time, but also preparing them correctly. The directors have that duty to create a set of accounts which create a true and fair reflection of the company's financial snapshot at that time. And if you don't think you can do that, then I would defer to a professional to carry that out for you. It reduces the liability that gives rise to yourself, and overall ensures that everything is in order.
Mm-hmm. And to help with that, would you have any suggestions for maybe some accounting software they could use?
That's actually, that's a good point. In addition to looking for an accountant, yes, you're probably going to want to start thinking about getting some software to help track everything going in and going out, and all of your other accounting records. I don't have a particular suggestion. Why? Well, number one is there's a lot on offer, and again, every company is different, and there's a lot available now. So I suggest that every company owner, all directors, go out to market and see what's available. I would also suggest, actually, if they do have an accountant, to speak to that accountant, because that accountant might have suggestions as to what they think is the best software. Or they may even have a specific type of software that they want you to get, which can plug into their backend and help as part of their work in putting your accounts together.
Amazing. And so I guess we also touched on this one a little bit earlier, but to go into a bit more detail, when it comes to finances and bank accounts, what can we suggest for customers when it comes to the bank accounts?
Again, I think general rules have to apply because of the inherent independent nature of every single company. Mm-hmm. Again, there is no specific, there's probably no right answer out there, and there's certainly nothing that we can say, you need to go for this or you need to go for that. There's a lot available here as well now, because we're not just talking these days about your regular high street banks like NatWest or Barclays. There's a lot of challenger banks out there who are able to provide an offering that might be closer to your requirements. So my only suggestion there is that you shop around, you see what's available, and perhaps there is something that works for your particular case.
And as part of your shopping around, so we have a number of banking partners that you can select when incorporating with us. So if you do prefer someone like a high street bank, we can refer you through to Barclays. We do also have a number of challenger banks, so people like Anna Money, Counting Up, Cash Plus. There's a whole number of referrals that you can select from. And even for our customers outside the UK, so if you're not residing in the UK, if you're abroad, we can refer you through to Wise, that used to be known as TransferWise. They have some great options for, like I say, customers outside the UK, including things like multi-currency accounts.
Just wanted to pick up on that, Liam, before we move on. I wanted to dispel another myth here today. You do not need a UK bank account for your UK company. That has never been a requirement. It is not a requirement right now. If you so desire, you can create a bank account in another country overseas and use that for your UK company. Now, the process of setting up a bank account is probably going to be similar to that of the UK. And when you're setting up a bank account, they're going to want to know a lot about you. They're going to want to know information about the directors. They're going to want to know information, proof of identity and so forth of the shareholders, those beneficial owners, the ones who are going to get the money or the benefits of the company. They're going to want to know all of that, and they're going to want to know exactly what your company is going to carry out, what activities it's going to do. The sort of the little hair in the soup here, if you do decide to register or create a bank account abroad, is that what you'll find is the sign-up process may be slightly complicated insofar as certain documentation might not be acceptable when you're setting up an account. When you're going through the due diligence process with the bank abroad, whilst in the UK it may be as simple as saying, it's this company here and here's my registration number. Remember that thing that we get from Companies House. That might not apply to banks abroad. And in fairness, how can there's a lot of banks out there. How can every single bank know exactly how it works in the UK? So one of the things that they do is they say that as part of the due diligence, they might want certain documentation to say this company is alive, actually exists, which you might use the certificate of incorporation as your evidence there. I want to know who's behind it, so I could use maybe the incorporation documents, maybe a register of members or something like that. You might use those documents, but you might have to do an extra step, which is called apostling the document. And the process of apostling a document, in the UK, it is the FCDO, the Foreign, Commonwealth and Development Office, who issue the apostles. Apostle, by the way, is a French word. It means certificate. This whole scheme was put together under the Hague Convention. What essentially means is that the document can have the signatures verified as being genuine, or the seals verified as genuine. It doesn't, when you get a document apostle, it doesn't confirm the legitimacy of the content of the document. There's never a suggestion of that, but it's saying that, yes, this signature that you have on here is genuine itself. And by doing that, you can then, other countries or the banks in other countries generally will be able to accept that document. They'll be able to take that on. The actual apostle certificate, it's a fairly small thing. It's just a small piece of paper that gets appended to the back of the document in question. I think it's literally PVA glued onto the back, and that would then usually allow that to be accepted abroad. What I would say, just one final point before we move on. Mm-hmm. In terms of what documentation you need if you're setting up a bank account abroad, what documents you need to be apostilled so that you can present to them, that's a matter that you need to confirm with the bank in question. Mm. That's something, every bank is different. They have all their own different requirements of what they will accept as evidence and what they won't. Some will only accept information that's been a document. If let's just say you're setting up a bank account, they need to know about the shareholders, who owns the company, they say. Some might accept a register of members, which in short is basically an internal record which says, hey, these are our shareholders as at this stage. Other banks might only accept information that's been submitted and is available with the public registrar, in this case Companies House. So for example, your incorporation documents, that IN01 form, that application that we put together and submit to Companies House to form the company, some might only accept that as the evidence of who the shareholders are right at the start of the company's life. I guess the point I'm trying to say is make sure you have good open dialogue with your bank when you're setting one up abroad as to exactly what they require. Because getting an apostle is not the quickest sometimes. You know, I generally plan for about a week, 2 weeks for it to be completed. And what you don't want to do is put everything together, maybe on the basis of something, you know, an experience you had before, putting it all together, turning up to your bank one day saying, here's the documents to show everything you need, and they say, sorry, we can't accept that one document. Happens a lot. And then you've got to go through the whole process, obtaining the relevant documentation, getting it apostilled, and then booking another appointment. It's something that I find delays a lot of people, and, you know, just clear communication beforehand, make sure you're completely aware of where you stand, what they need, and then that should see you through.
And if you are needing documents apostilled again, we can help out. So we can take the hassle out of having to deal with the Foreign, Commonwealth and Development Office. We can do that for you. We can apostle a singular document, or we also have a bundle for 3 if you find you need more than one.
I know I said, I already had my last point. Oftentimes, banks will require multiple documents. They will require multiple documents apostilled showing different things. Some will say, oh, if you just give me, you know, the incorporation documents, I'll accept that as evidence that exists, evidence of who the directors are, evidence of who the shareholders are. Others will come back to you and say, hang on a minute, no, I want one document apostilled, that's the incorporation certificate, one document apostilled which shows who the shareholders are, and one document apostilled which shows who the directors are, and it has to come from the public register. So, you know, that it's another good point. Not only do you need it, you might need the document apostilled, you might need quite a few documents as well.
Definitely. And I guess part of this, or key to this, is knowing what information you're going to need. And I guess when it comes to your company and running your company, something to get good at is going to be record keeping and good record keeping. Would you agree?
I vehemently would agree. Good record keeping is important. Indeed, it is a duty, again, of the directors of the company to ensure takes place. What does record keeping mean? I guess there's 2 elements. You know, there's actually keeping physical or digital records of what's happening, what's going in and out of the company, and also the retention of said records. You know, there's no set rule, again, or at least no general rule, I should say. And so you have to look at this on a case-by-case basis. So take the finances, for example. You know, you need to ensure that you have good records, not least to help you create that true and fair set of accounts that we talked about earlier. So, but in addition, you have to ensure that you maintain good records and also keep them. And the law in this case is you have to keep financial records for at least 6 years. It's a similar story for things like your statutory registers. I don't want to go into it too much, but essentially it's a duty of the company and specifically the directors to ensure that every company has a set of statutory registers. Register of members, that's the shareholders, register of directors, and so forth. It's basically a set of Bibles that are the be-all and end-all. They say this is who owns the company, this is who runs the company. Again, that's something that you need to keep using or maintaining on an ongoing basis. Even things like insurance. Good record keeping, very important there for obvious reasons. But my favorite example to use here, and it's determined by law, is that if you have employer's liability insurance, so if you are employing people like we said earlier, and if you happen to have that insurance, then you need to retain the certificate, you need to retain the schedule for 40 years. That, by the way, that retention period, in addition to being long, also applies, as indeed to pretty much all retention requirements, do continue to apply even if the company dissolves or ceases to be. You would, generally speaking, still need to maintain those records for that time being. So your reaction, I think, a very common, very And the completely understandable reaction is, well, I'll just keep all records to be safe. Completely understandable. Two problems. Number one is you'll end up drowning in records. I mean, probably not physically anymore because most records are digitally, but the point still stands. You're going to accumulate a lot of data, a lot of information. And the second thing I would say, because oftentimes people just keep everything because they hope it will keep them safe. Actually, sometimes it could even cause them harm unintentionally. And what I mean is that there might be information that has to be destroyed after a certain amount of time, sensitive information. I haven't even got into regulatory matters that might require things to be deleted, to be destroyed, what have you. And if you ignore that and you just maintain all of your records, again, it can be industry specific, it could be general, then you could find yourself in an even worse position, despite the fact what you were trying to do is to make sure that you stay the right end of the law.
Mm-hmm. Absolutely. And just finally, before we jump into questions, we've had a lot of questions come through, but when it comes to companies, obviously things are going to change. A company is going to evolve as time goes on. What do we need to report in terms of those changes?
You're absolutely right. Companies will change. It's a natural part of their life. And that's not necessarily a problem. Companies might naturally change because plans change. Companies might change because a mistake was made at incorporation. These changes can be anything from adding on another shareholder, adding on another director, changing the addresses. It will likely, in all likelihood, take place to your company. And each of those changes will generally need to be reported to Companies House. And with that will also come a series of deadlines. So to use my example, if you appointed a director, then you have an obligation to inform Companies House that a new director has been appointed within 14 days of that appointment taking place. Similarly, if you issued and allotted shares, that starts off a timer whereupon within 30 days you then need to tell Companies House, hey, by the way, I've issued and allotted shares. This is the details of that allotment. I could go through every single one, and there's a lot of changes that might take place to your company that then need to be sent over to Companies House. So not only do you need to be aware of them, you also need to be aware of not falling afoul of those deadlines. And what I would say to that, the best way to deal with those issues, if you can call them issues, those additional deadlines, is to seek professional advice, so that you don't fall afoul of something that you just don't need to.
Definitely. So like I say, we'll go into some questions now. So we had a lot come through, so I'll pick out some questions here. So this is a good one. So if you've received your UTR, does this mean you are registered for tax, or do you still need to register? This one's come from
the UTR number is the best way I can say describe as the gateway. The UTR is not you having been registered for tax. It's also a common misconception that is your corporation tax sorted. It's not. The UTR number is just there for your identification purposes, which you then use as part of your registrations, whether you're registering for corporation tax, because remember you've got to do that within 3 months of starting to trade. That's when that would kick in. That's what it's there for. It's an identification. It's not tax in its own right.
Mm-hmm. And we've got a question from Alexander. So when is it mandatory to register with the ICO?
I think with the ICO, so the ICO, the Information Commissioner's Office, they deal with data protection registration, which if you fall within their regulations, you have to be registered. What are their regulations? Well, it's their regulations are if you process personal data. So I don't know off the top of my head if there is a specific deadline you have to have been registered by, but what I do know is if you process personal data, you need to make sure you are registered with them. So if that's something you're doing or intending on doing, all I can say is that you should register immediately. And what I would say is that the ICO, they have a very good online self-assessment form which you can use. It will answer you a series of questions about your business, and it will tell you at the end whether you're likely to need to pay the data protection fee at the end of it. I think the ICO is also fairly good at sending reminders out to new businesses. They'll I think they usually contact you within about a month or so, and, checking how you are, how you're doing. Do you realize you might need to pay a data protection fee, register with us? And if so, this is how you do it.
And we've had a few similar questions come through. So Stella from Edinburgh is asking, I've set up my company, but have no intention of trading with it for the time being. Are there any processes that I need to follow, or can I just leave it?
No, don't just leave it. That is, unfortunately, a surefire way to problems later. There's no set process. One of the things that I often find myself explaining is that there's no such thing as a dormant company. There's a company that is dormant, it's a state of affairs, and they may have informed certain agencies that for their purposes, nothing's happening, they're dormant. So let's just break it down into two, the two most common ones, which I think everybody's after. The first one, which is Companies House. No, there is nothing that you submit to say, hey, I'm dormant. You won't log on to Companies House and you won't, they've got a little status section for every company. You won't log on and find any of them that says dormant. Usually it just says active or dissolved or in liquidation or something to that extent. But that doesn't mean that your requirements at Companies House cease. There's nothing in the Companies Act which says all of this can be ignored if you are dormant. So what that's taken to mean is that even if you're dormant, you still need to get in your confirmation statement. You still need to file a set of accounts. If you are truly dormant for Companies House's purpose, you can actually, you may be eligible to submit dormant company accounts, which are sort of a very simplified balance sheet, quite easy. It's something that we also do to submit online. And that means, again, that doesn't change any status. That doesn't say to Companies House, hey, by the way, you should treat this as dormant. It just says, hey, by the way, during that period, nothing went through the books per the Companies House definition, which is dormant company for Companies House's purpose is any entity where there are no significant accounting transactions, which basically, Liam, is just anything going through the books. But then we've got HMRC's side, who naturally, they're going to want to make sure that you're paying all the taxes that you owe. If you are dormant, unless you tell them, they will expect you to complete a corporation tax return, to use that example. They're going to say, tell us what's happening in your company and pay us what you owe us. If you are going to be dormant throughout the entire period, throughout the entire accounting period for HMRC's purposes, then you should tell them in advance and say, hey, this is my company, here's my registration number, here's my UTR. Again, when you're talking to HMRC, first thing they're going to ask every time, UTR, what's your UTR? It's my 10-digit code, I've got it right here. But what you would do is you'd say right from the off and say, look, I've got this entity. It is dormant for HMRC's purposes. Please don't make me file a return. I don't owe you anything. And they would, and if they receive that in time, and you've given them the information that they need, they will then say, okay, thank you. We will not be chasing you, hounding you for a corporation tax return. They usually give like 5 years or something, and then you'll need to check in with them and say either, hey, I'm still dormant, or now things are moving. Just as a quick point, the definitions between what's considered dormant or dormant for Companies House and HMRC's purposes is different. So there are situations where you can be dormant for one of their purposes, but not the other. As I said, Companies House's definition is just simply, is there any significant accounting transactions going through the books? Which again, basically means anything and everything, however big. HMRC's definition is ever so slightly different. They say that it's just when you commence trading, which is a bit of a wide definition, but again, that gives you a little idea. If you're dormant, well, the first question I'd probably ask is, how are we dormant? And even if we are dormant, well, we've still got to get that stuff over to Companies House every year, confirmation statement, annual accounts, and any other changes that might take place to the company. I'm going to worry about these guys, HMRC. I don't want them after me for something I don't owe them, because even if you don't tell them you're dormant, and even if nothing happens, you don't owe them anything, if they don't know, they're still going to say, they're going to send you reminders. I don't know if they knock on your door, but they're going to send you reminders saying, where's your tax return? And if you're late, you will be fined. So yeah, that's a common area of concern, and you want to make sure that your position is very clear.
Absolutely. I'm conscious of time, but this question ties in really nicely. So Mohammed from London would like to ask, he's a bit confused about the relationship between Companies House and HMRC. Can you kind of give us the difference between those two?
Yeah. Entirely separate entities, and actually fairly common to confuse the two. To give the broadest difference between them, Companies House are there to incorporate your company. That's who you send your application to. They are there to take your filings. They are there to close your company if you either ask or they decide that they should do so. Like if you forget your confirmation statement, which we don't do. That's their job. HMRC's job is tax related. They're not interested in, has it been formed? Have you sent in your articles of association? Have you, told them about new shares or what have you? They want to know, that they are there. Do you owe us any tax? So they look after tax matters. They look after registrations for those purposes. Very common for people, and I understand it, to get the two confused together. Probably one of the most common things that I get near enough every week is, I get customers who come to me quite confused, and they say, look, I asked your company to file my annual accounts with Companies House, and now I've got a fine from them saying that I didn't get it in. Of course I did. I paid you guys to, I arranged for it to take place. And then what normally happens is I'll ask to see the letter in question, and it's HMRC's letter. They're saying, look, you're late for your corporation tax return. You've been fined. Two very different entities. Sometimes they can overlap. The accounting periods for corporation tax usually overlap with accounting periods for Companies House's purposes, but again, two completely different ball games there, Liam.
Definitely. And I think, conscious of time, but I think we've got one more I can sneak in, because it does look like this question's come up a bit. But can a company register for VAT even if it does not meet the threshold?
Yes, definitely. I think we've got a pretty good blog on this, actually. So as I said, VAT becomes compulsory as regards registration when you hit the £85,000 threshold, the £85,000 revenue threshold. But that's only when compulsory registration kicks in. You can still register if before you hit that threshold. And there can be various reasons why you might want to do so. Probably the biggest one that I find is that people tell me that it's fairly well documented. It does give a sense of size. It does give an element of or suggestion the company is bigger than they might actually be, because a big company has a VAT number. It says it on their invoices. They collect VAT, and I guess what a lot of people's view is that if they register anyway, even if they haven't hit that threshold, and yes, they'll take the penalty in terms of they might have to carry out a few filings. Remember that generally speaking, you will have to complete VAT returns on a quarterly basis. There are schemes to change it to say monthly and pay those a month and 7 days afterwards. For some people, that penalty might be worth it. Their customers might expect there to be a VAT number on there. So that's actually probably more of a commercial decision rather than anything else. Absolutely, you can register voluntarily beforehand. That is something that a lot of companies choose to do.
Fantastic. So I think that's pretty much all that we have time for today. But if we haven't got to any of your questions, please do send them through. So you can send them through to us on talks@fairfaxlaw.com. firstformations.co.uk, so that's talks with an S, at firstformations.co.uk. So this is the first in our series of webinars, so please do join us for the next one. If you wanted to look into anything companies a bit more, we've got a whole lot of blog posts on our website, so you can go through those. Or if you haven't seen enough of Nick, we've got a YouTube channel that you can go to as well. There's a number of videos on there covering a whole wide range of topics. But like I say, this is the first one here, so if hopefully we'll see you for the next one. But I hope you've had a good time, and we'll see you later on.
Cheerio.
Thanks.